So these are 5 tax-free allowances you need to know about in order to make sure you're paying the least amount of tax possible. Hi guys, welcome back to my YouTube channel. Today we're talking all about some of my favourite tax allowances that are going to help you keep more of your cash and pay less in tax. So we're going to run through 5 today. We're going to run through the personal allowance, the personal savings allowance, savings nil rate band, dividend allowance, and the capital gains annual exempt amount. So these are some very, very powerful tax allowances that when used in total, and if you combine them with one another, can actually save you thousands each and every tax year. So it's important that you understand these and you know how to use them to your advantage. So we've run through the first one, which is the personal allowance. So broadly what this is it's £12,570 for the current tax year, and it's available to all UK citizens. So if you're living in the UK, paying tax in the UK, then you're entitled to a personal allowance, and this means that all the income that falls within your first £12,570 is completely tax-free. Whether that's income from employment, whether that's property income, whether it's savings income, dividend income, no matter where it comes from, as long as it falls within that basic rate, that personal allowance, it's completely tax-free and there's nothing else to pay on that. So you're making sure that at least if you're using this amount each and every year, if you've got a trading business, if you've got a limited company, if you've got something where you can take money from it, and you've not got any other income, using at least your personal allowance each and every year is a fantastic way to basically use the money, get the cash out of your business so that you've got it in your own name because you're not paying any tax on it. So it's an absolute fantastic way of saving some tax. So the second one is the personal savings allowance, and this applies to interest income. So if it's from a bank or interest from your limited company, having this personal savings allowance is a great way of getting some tax-free interest. So if you're taking £1,000 a year as a basic rate taxpayer, this can be received completely tax-free because your personal savings allowance is available. The way it works is that it taxes the first £1,000 at 0% for basic rate taxpayers. If you're a higher rate taxpayer, it's £500 taxed at 0%. As an additional rate taxpayer, unfortunately you don't get it, but for basic rate taxpayers and higher rate taxpayers, there's definitely some tax to be saved. Using this each and every year, even as a basic rate taxpayer, will save you £200 a year, over 10 years, £2,000. So it's a very, very useful, and for people that are just starting out in business, knowing these kind of tips and tricks now that they can apply for the next 20, 30, 40 years, is a massive amount of tax that is going to be saved here. Is the savings nil rate band, and what this does is it taxes the first £5,000 of interest. As long as it falls within your first £5,000 of taxable income, it actually taxes this at 0%. So if you've got a lot of interest income, or if you've got a director's loan account that you're charging interest on, you can take your £12,570 of other income. Then as long as your next £5,000 of income is interest income, that's also going to be taxed at 0% because of this fantastic savings nil rate band. Taxes all that interest income at 0%, which is a saving of up to £1,000, being 20% of that £5,000 worth of interest income. So definitely check that one out. Number 4, the dividend allowance. So each and every year as a taxpayer, you're entitled to a £2,000 dividend allowance. What this does is it allows you to receive £2,000 in dividends completely tax-free. So if you've got a limited company and you're able to take dividends, even if you don't want to use them to spend, you want to keep the money in the property, in the business to reinvest, absolutely fine. But make sure you at least put the dividend vouchers through and let that £2,000 go to your director's loan account, which you can then later take out tax-free. So it truly is a win-win. If you don't use any of these allowances, they do get lost. They're only available in the tax year. So make sure you do use them during the year, otherwise they're gone and you'll have to basically wait until next year to get them, and you would have missed out on the tax benefit from using them in the previous tax year. And last but not least, we've got the capital gains annual exempt amount. So a lot of people at the moment are making capital disposals, whether this is selling a buy-to-let property, selling some assets, cryptocurrencies, they're absolutely massive one at the moment, people that are cashing out. All of these count as capital gains disposals, which means there's CGT to pay, but the good news is, similar to the personal allowance, you've also got a capital gains annual allowance or annual exempt amount. For the current tax year, £12,300. This means you can make £12,300 in capital gains during the year and you won't have to pay any tax on that. So as long as they're under this amount, you don't usually need to disclose them. There's no tax to pay, and that's it. So it's nice and straightforward for people with those small gains. Anything else, of course, you'll need to look at disclosing your tax return. But for most people that are under this limit, maybe small crypto gains, you're going to be absolutely fine. So as mentioned, all of these limits are only available in the tax year. So you need to look at using them now. Get your personal allowance. Structure how you're going to take money from your company. Are you going to be able to take dividends? Are you going to be able to use your capital gains annual exempt amount? It makes sense to use this. I know a lot of people, they often might have a property portfolio looking at selling and they want to offload it all now. If husband and wife joint name, that's £24,600 worth of capital gains annual exempt amounts they've got there. So if they stagger their capital gains over a number of tax years, they're going to get a capital gains annual exempt amount each for each tax year. So that's potentially up to £5,000 they're saving in actual cash tax just by selling a property each and every tax year to use that capital gains annual exempt amount. So definitely look at doing some savvy planning like that, because it will save you tax in the long run. I hope you've enjoyed today's YouTube video. Please do hit that subscribe button and that like button, because it helps me massively. And also, if there's any content I can do for you guys, any questions you've got, do drop them in the comments. I'd love to help. That's all for today, guys. Thank you very much for watching.